Hello everyone, and welcome to the TradeShark weekly blog. Each week, we will take a look at a new set of technical indicators found exclusively within TradeShark. This week, I will demonstrate how traders can utilize two premium indicators from world-renowned stocks and commodities trader Larry Williams. For those unfamiliar with Larry Williams, he has been a huge influence on the trading industry over the course of his career. He has authored numerous best-selling books, educated countless other traders, and has developed indicators that are widely used all across the world. The two indicators we will review today pair extremely well with TradeShark's trend forecasts, as they are setup tools and allow traders to recognize conditions that precede large directional market moves and trend reversals. Let's start by taking a look at the Electronic Market Accumulation Index, which you can see on the bottom of this chart for Best Buy stock. The Electronic Market Accumulation Index, or EMAI, measures professional accumulation and distribution in the market. For a market to rally, it needs new buyers coming in, not institutional interests selling under the guise of short-term price strength. For example, notice in this chart for Best Buy how prices really start to accelerate towards the middle of the chart. However, the EMAI is not matching that behavior and showing a divergence. While prices are continuing higher, the index is going lower and lower. This signals that prices may not be supported at this level, and traders should look to initiate new trades to the short side. This type of signal from the EMAI often precedes a large market move that can last several months. And as we can see, Best Buy has had a pretty significant decline. A trend follower or day trader who recognized these conditions would have no issues capturing profits in the market over this time period. However, notice how currently prices are at a fresh new low. However, the EMAI has started to turn up and move higher once again. A trend follower may look to tighten stops or take profit on any short positions, but would certainly not be looking to add to a short position expecting any type of continuation. But let's go ahead and look at a few more examples to help demonstrate these concepts more thoroughly. On this chart for Lennar stock, we can again see how prices have run up to a new fresh price high. But traders using the Electronic Market Accumulation Index can easily recognize this false price rally higher and prepare for a decline. Prices then shoot lower by about 15% from peak to trough and have yet to recapture their previous highs. This is why it's so valuable to have tools that allow you to recognize market conditions, as it would be very painful to try and hold any sort of long position on this stock. When the large money leaves the market, you really do not want to stick around. In addition to tracking large institutional buying and selling, it is valuable for traders to keep track of market sentiment, as it is an important guide for short-term price movement. If the Williams Accumulation Index models the activity of large institutional buying and selling, it can be helpful to think of the Larry Williams Professional Sentiment Index, located at the bottom of this chart, as a model of professional traders, whose sentiment can vastly change based on current market prices. Also, this index runs on a percentage scale from 0 to 100, so it can be helpful to think of the index as a certain percentage of bullishness or bearishness in the market, with a reading of 50 not giving much signal one way or the other. Looking at this chart for Pulte Holmes, we can see things quite clearly. As prices begin to move lower towards the beginning of the chart, traders would recognize the bullishness from the Professional Sentiment Index as it crossed above the 80 threshold. A trader would either look to cover a short position or go long the market, under no circumstances looking to open up a fresh short opportunity. On its own, the Professional Sentiment Index acts as a great tool for spotting overbought and oversold conditions in the market. However, When combined with the Williams Electronic Market Accumulation Index, traders can identify markets that are set up, essentially pointing traders towards opportunities where the big money all wants to be on the same side of the trade. For example, if I go ahead and add the Electronic Market Accumulation Index to this chart, we can take note of when both indicators were showing matching signals. You will also notice that I have the option of adding the EMAI to the price data field or dragging it to the bottom of the screen and giving it its own separate area. Please choose whichever works best for you. Notice how prices have moved to a new high. However, the Electronic Market Accumulation Index is still well off of its value highs. This signal ties in perfectly with the bearish signal from the Williams Professional Sentiment Index, which warns of a major trend reversal setup. TradeShark users can then use the predicted moving averages and neural index to manage their long-term swing trades, or day trade off of TradeShark's predicted high and low values. The point is that it's time to start executing your trade strategies to the short side of the market because of the conditions identified from each Williams indicator. In this last example, we can take a look at RBOB, or gasoline contracts. Many traders may have missed the recent rally in oil and energy stocks, which have resulted in great trading opportunities. Taking what we have learned in the last few examples, we can see how these indicators may have helped you make a lot of money, while other traders may have been too afraid to act. As prices moved to fresh new lows, traders using the Williams Electronic Market Accumulation Index recognize that they need to prepare and go long. Remember, this also allows traders to recognize when to exit or adjust stops on any short positions in the market. Once the Professional Sentiment Index became bullish in line with the Electronic Market Accumulation Index, traders simply need to use TradeShark's forecast to determine when to enter the market. Since all of these signals lined up and TradeShark started forecasting the market to move higher, the market for RBOB gasoline is up about 28%, which is a huge move on a single commodity in such a short period of time. It's important to remember that the Williams indicators aren't a trigger. They are a setup tool that allows traders to recognize when market conditions are favorable. Traders who pair the Larry Williams indicators with the predictive tools from TradeShark have a huge edge in the market. It allows them to prepare for trades early and pay attention to the markets that are more likely to perform as expected. I hope you have all enjoyed this presentation of the Larry Williams premium indicators found exclusively within TradeShark. For additional information on third-party indicators or the technology that powers TradeShark's predictive forecasts, please visit www.tradeshark.com.